the Trump administration, has made a deal with Japan, a deal that Japan has agreed to, which is to commit $550 billion of direct investment to help reindustrialize the United States of America. Now, that's great. The question is, the terms of the deal say that 90% of the profits go to the US Treasury and only 10% go to the Japanese. If that actually is the case, nobody at Japan Inc. would want to do that type of deal because it's against capitalism. It is exactly against what America for decades has been teaching Japan, that you should only commit to projects that meet your cost of capital, that are profitable. And from that perspective, I think this deal between Japan and the United States, yes, is progressing, but it's progressing very slowly because of corporate governance in Japan. Japanese corporate leaders saying, wait a minute, this deal does not make sense for our shareholders.
Which is a good thing, right? The pushback.
That's exactly right. And so, it's very, very interesting. And you pointed out that we got the announcement of the first 36 trillion, I get confused with the numbers here. Japan, everything is bigger. $36 billion, of which $33 billion is Masayoshi Son and SoftBank, which is basically a charismatic run company rather than, a balanced board run company.
And Jesper, how does this tie into the supply side reform that's been really called for a while in Japan? And I know that you spent some time talking about this, but the fact that, as you say, the prime minister not having some sort of an ideological preposition, do you think this is it? This is the administration that can actually get the job done?
Yeah. So you put your finger on the pulse. I mean, we all want to talk about fiscal policy. We want to talk about monetary policy. But the real issue here in Japan, and the real issue Prime Minister Takaichi in private is passionate about, is industrial reorganization. There's too many companies in Japan. There's too many players in Japan. Why does Japan still have 7 car companies? So I think that as her administrative team gets past the budget and rolls up their sleeves to actually do real industrial policy, I think we're going to see a concerted effort to actually create Japan's national champions.
And speaking of the creation of national champions, as you talk about, are we really talking about fewer than 7 automakers in Japan in a couple of years from now? Now that she's secured a landslide victory, she's good to go when it comes to her support ratings. And she is a popular prime minister in Japan, and we haven't had that in a while.
Exactly. And, look, I mean, taking the money that you use to support zombie companies and funneling it to support the creation of national champions, is obviously something that is going to meet some resistance, particularly amongst the smaller and medium-sized companies, amongst the politically influential companies that are zombie companies. But I do think this consolidation, the reform of the industrial structure in Japan is the big theme going forward. And certainly from an investor perspective, I think that's what you should be focusing on rather than trying to lose sleep on whether Japan's fiscal deficit is a little bit going up or a little bit going down.
Yeah, and you also point out this very interesting fact. Last year, 7% of listed companies receiving takeover bids. The number in itself is a wow. It's a big number. And how does that somehow shape the investment thesis for investors going forward with all that busy M&A activities? If you're not a private equity guy, what do you do?
If you're not a private equity guy, you are actually in a fantastic position because basically, all these companies being forced to merge, all these companies being taken off the table. Last year, we had more delistings than new listings in Japan for the first time ever. All this is great for the remainder of listed companies. So if you're just a retail investor, buying a long Japan Nikkei 225 or topic strategy is a perfectly good way to do, because as these takeover bids come through, as those lazy balance sheet get reduced, as mergers and acquisitions accelerate, what you will find is corporate Japan, the index actually being a big beneficiary of this.
Jesper, when I talked to JPX CEO Yamaji-san last year, he told me that he thinks in terms of corporate governance, Japan is only about 20% of the way there. I think he was being part humble and a part telling investors and myself that global investors want to see more from in terms of corporate governance reforms. What's the next step?
It's very interesting. I think, you as a regulator or as the stock exchange, it's always good to see that you're humble. They say, oh, we're here, we are perfect. No. There are things that need to happen. And on corporate governance reform, for example, one issue that's still outstanding is the CEO selection. Very few companies actually have an independent board committee that actually decides and runs the selection of the next CEO. As you know, many Japanese companies, the CEO selection process is basically just who stands on the escalator the longest. It's still very much a seniority driven rather than a meritocracy, and also looking at potential outside candidates. So, there are still some things to do, but for all intents and purposes, I think the reality that the market for corporate control, the market for corporate directors in Japan 5 years ago was nothing, zero. Now you've got a genuine market for corporate control, and that we're continuing to accelerate, not so much because of corporate governance reform, but primarily because the Japanese banks are now actually lending if you want to do a takeover bid, which is also very, very new.